Yo yo, testing the audio. 1 2 3, 1 2 3. Yo yo, testing the audio. 1 2 3, 1 2 3. Audio sounds good. Crispy, crispy, crispy. Let's get it. So, this is the start of the eternal. Can't spell. Model. Forever. The start of the eternal model. This is the forever summer. Friends, I want you to understand something. This is something that always occurs. The market is manipulated. It's set up against you. Before you're even trading a model, before you're even actively pressing the button to trade, you need to understand something. This is going to take time. It's going to take dedication. It's going to take persistence. You are the only one that can make this happen, and you are the only one to fuck this up. Nobody's gonna save you. Nobody's gonna make it work for you. Nobody's gonna help you. It's all just you. There might be people there that share information, show you it's possible, but nobody could execute for you. Nobody can manage your risk for you. Nobody can simply do it for you. You are the one that has to do it. If it's not for you, then who? You are the one that's meant to be the change. So with that said, let's just go ahead and dive into honestly, the heck is a candlestick? So there's bullish candlesticks, and then there's literally bearish candlesticks, right? Two different candlesticks. I'm sure everybody's seen these if you're familiar with trading. If you've studied charts, you've seen these two colors before. I don't truly want to spend a lot of time in this section because I feel like there's so much out there already on candlesticks that I'm sure everybody could understand a high, a high, a low. I'm not trying to really spend a lot of time here. The high, the low. Since this is a bullish candle, do I have open? Oh, I can mark it when that open. Works good enough. And then the closing price. And it's literally just opposite. Whew. So the bullish candle opens down here, closes here, the high, the low. And then for the bearish candle, it's simply just reversed. So this is the closing price, this is the opening price. The high. I think you get the gist. And there's so many people out there that make videos on this stuff. So I'm sure you could find somebody out there. I've actually never used any of these tools. I thought there was like I could select all, just highlight and select all. But delete all this. So now that you know about open, low, high, close of a candlestick, if we jump to a daily chart, you could start to see my bullish candles that were just green, they're white. And my bearish candles, they're purple, that were red. So you can understand that much. So you could start to see highs and lows. Lows, lows, lows. See the lows, and then the highs, the highs, the highs. I think you're starting to see it. I'm not trying to spend too much time on these lighter subjects, but for instance, there's this very peak. That's the high. And then the previous candle was lower. And then the following candle is even lower. So that's making a swing high right there. If you could see that there. So this is a swing high. So this candle here, this middle candle, and this candle. So I'm going to circle them. Let me do a little better job. Not a circle, but I think it works better. So this is a swing high. Now you have to remember price is fractal. So if we're on a daily chart, you could also see this exact same pattern on a 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, 15 second. The same exact pattern, this swing high. It's the same for a swing low. So you can see this is the lowest point here. Lowest point. And then the other 2 points to make that swing low. See it? Swing low. It's the lowest point and it's generating liquidity down there. So after seeing a swing high like this, which is that highest point, and then the next candle is lower than the previous two, with the middle candle being the highest point of the three. So that is a swing high. So you would be then looking for where a swing low could have been, or sell side liquidity, or a potential PD array or imbalance to target for profit. So for instance, there's a lot that people talk about, and I'm not really gonna go full on teacher methodology here, because I do believe that I have some videos that are pretty detailed, and if anybody needs information, they would always reach out to me and I'll just send them like straight ICT videos. Like everything's on ICT's YouTube, so if you need it, it's there. You could go find it. So there's this gap between the bodies right here on the day. It's a volume imbalance. A volume imbalance on the daily, right? And if we know market wants to draw to inefficiencies, rebalance to equilibrium, hunt liquidity, generate liquidity. Market's doing one of those 4 things all the time. I'll write it out. Market always I can't spell. So I think that's all spelt right. Maybe not. Correct me if I'm wrong. But the market is literally doing one of four things always. And if not, I don't know what's happening. The world's broken. It's hunting liquidity. It's generating liquidity. It's rebalancing inefficiencies or rebalancing equilibrium. It's one of the four things the markets are always going to do. If the market's doing one of those four things, I promise you. So after seeing this swing high, we know the market has to do one of these four things. Okay, after hunting liquidity, we know we generated liquidity. All right, this is generated. How do we know that's generated liquidity? Generated liquidity simplistically being, so you see these wicks down here? Okay, you see this that I have marked right here? You see how market draws, fails to break down here, and then it just runs. So you look at this in one of three ways. Sell side, you have a imbalance right there, fair value gap on the daily. See it being respected. The wick doing all the damage. See, that's another signal to you, generating liquidity. Wick doing all the damage, and it also fails to breach down to 50% of this wick here on October 17th, 25. It fails to breach. So in my mind, that is generating liquidity here. All of this is generating liquidity. It's gonna be hunted later. So knowing that, after seeing swing high, right? You see a new inefficiency, right? Daily FVG, or other words, it's a SIBI, sell side imbalance, buy side inefficiency. So we're selling, right? Sell to go down to sell side liquidity, right? Market sell side liquidity, right? And then you have buy side liquidity. See, we generated buy side. This is generating. See, swing high. See how it breached previous wick, and then the next day failed, and then failing to draw to the 50% of that high wick. See here, failing to draw to the 50%. That's generating liquidity. People's stop losses are resting there. Think about generated liquidity in that aspect. Stop loss is being generated. So market is going lower, retail is fumbling in, stop losses are being put here. A lot of stop losses. This is becoming a minor sell side liquidity for later. And after taking sell side, we're in this accumulative state, drawn finally, because if you notice here, after making FVG, after making our fair value gap, this box here between these three candles, we never traded back up too. This candle should have came up and then down. So that's signaling to you, that's why I said this is also this generated liquidity, because this is market manipulation. You can see how we fail to draw up to the fair value gap. Even here, still failing. And then look, January 26th, we finally fill it, right? You notice it? That's the wrong click. This. See how they stack? Double confirmation short, and then here's a sorry. Here's a third confirmation for you. See it? This is all on the daily chart. And then volume imbalance. Yeah, I know it was August 20th lows of 2025. That was the target, August 20th lows. You can't even see it here. Right here. I'm on NQ so you can see it. See? August 20th. Yeah, see August 20th. It's like, how'd I know? Because I traded that. I literally took that trade right there. Like, I remember all of this price action from December, January, February, March, April, May, and here we are. Like, it's just the most, honestly, interesting times to be trading that I've witnessed in the past 2 years. To be truthfully honest, like, this market, you need to not be greedy, because if you're looking at the daily, it's like, what are you looking at? How am I supposed to trade? Look at the day. I'm pretty sure I called blow off top a couple days ago, live Discord in Riptide with everybody. I think it was Thursday? Last Thursday? Because Thursday's gap. I swear on my entire existence, Thursday, Big N. If Big N's in here, I don't think anybody's in here, but Money Two Shot or Big N, I swear it was on call with me when I was like, yeah, I'm pretty sure I see this as an exhaustion gap. We could potentially start going lower now. And then what do you know? So far, Thursday's price action, Friday, so far Monday, and then here we are so far. But all in all, on the dailies, like where we're at currently in price action, I would truthfully be looking down here. I'm looking lower in all honesty. If they really want to run this up to like 30k plus, I see us really dropping lower now. Only because it kind of makes sense, to me at least. But when you're trading the model, you have to remember. Let me go back to MNQ. You have to remember not to get greedy. You have to remember that, because some of the stuff I have posted, right? Yeah, 7 o'clock. Where's relative equal lows? Right, this is stuff that I have posted on my YouTube page already. The eternal model, literally.